Aditya Birla Group presents Budget 2015, the Make in India Budget. Co-presented by SBI. What market wants.
Well, good evening, ladies and gentlemen. Thank you very much for joining us this evening. To follow Manish Chokhani is a really difficult act, especially when he uses the word hopeful about 322 times in his interview, because then you've got nothing else to talk about except for that hope. But thank you for having us here. An eminent panel of fund managers is already introduced. And I think the question we're going to pose to them, or rather I'm going to pose to them, is the tough balancing act that the finance minister needs to do this budget. Keep an eye on fiscal responsibility and yet find some money in that budget to be able to boost public spending. That's the big expectation. And do it in a fashion which is efficient, because governments are not known for efficient spending, and in a manner that leads private sector spending to return. We're going to talk to our panelists about what they expect from this budget. And Sunil, I'm going to start first with you. The big sort of expectation over the last few weeks that's been building up is whether this budget will give infrastructure a spending push. But before we get to the details of that, my first question is this going to be an investment push budget or a consumption push budget? Because let's not forget, people also need to spend money. We have factories running at below capacity right now. So before you build the next auto plant, you want to be able to sell the cars that you produce and produce to full capacity.
So, very clearly, the budget is going to be definitely an investment-led budget. I'll answer the second part of the question, which is on the consumption side first. See, if you actually see, inflation is at a historic low. Sure. So, obviously, the pressure on individuals, P&L is reduced significantly. In fact, the way oil prices have fallen and the way the diesel and petrol prices have been cut, there is already a substantial saving in the hands of every individual. Now, you also take into account the fact that we are expecting some interest rate cuts. So the EMIs on your housing loan, on your car loans will automatically also get reduced to some extent. So I think on the consumption side, things are automatically falling in place. Okay. From a government's perspective, obviously the push has to be on the investment side, because the private sector definitely is going to take some more time before they are ready or their balance sheets are ready to undergo massive expansions or massive capex. And I think from our perspective, we would look at the government starting the investment process first. So very clearly, in short, the budget is definitely going to be an investment-related budget. Okay.
In the budget math, Dharmesh, do you see space for them to spend on infrastructure? Yes, there are savings on account of subsidies, especially fuel. Yes, there is higher tax collection on account of the new taxes that they've imposed on fuel or the hike in excise rate. And that could be substantial. I mean, on one hand, I think the savings amount to almost 0.5% of GDP with regards to the subsidies. The extra tax collection, I think by some estimates amounts to about 0.5% of GDP. So we're talking about 1% of GDP as leeway, some reports say. What's your math working out to?
Well, I think he has enough space to spend this time versus last time or even a few years back. Because oil prices where they are, the subsidy burden is not so high. Even the divestment targets last time were not met, despite that we are in a good condition. So this time around, in fact, because the markets are buoyant, there can be higher divestment targets and achievable ones, rather than only setting targets for the sake of it. So I think he's got enough space to spend more money this year around than last time. And end of the day, everybody now is talking about development and growth. And for that, you need to spend money. Unless the government doesn't kickstart the economy, you're not going to see this growth coming in. So now it's clearly, it's like you're playing the last 10 overs and you have a chance to only 2 wickets down. So whether we go and score around 350 from a 250 run target, or we succumb at like what we've done last 2 matches at 300. I think he's got a great opportunity to go ahead and start spending money.
I'm curious to know, will this market be disappointed if he sort of keeps a very firm eye on fiscal responsibility? Prashant, I put that question to you. If he keeps a very firm eye on fiscal responsibility and says, I'm not yet fully comfortable to start spending, on infrastructure or to sort of start moving public spending, I'd rather that I'm able to sort of meet my BM related targets, and rather that I'm able to pass a new Fiscal Responsibility Act, and once I've seen 12 months of comfort, then consider a big public spend push. Is that what these markets are okay with? Or will they be terribly disappointed if there is no public sector push?
I think it's very difficult to say how the markets will react, and markets are precisely like a voting machine, as Manish said earlier. But I think fundamentally the government needs to reduce fiscal deficit, because that is what gives you a sustainable way of growing over long periods. I think they may also support some consumption by cutting some tax rates at the lower income level groups. But fundamentally, if you see, India's tax to GDP ratio is very low.
It's 10% actually.
Yes, and it is lower than where we were 6 years back.
Yeah, that's right.
So it has to go up. And I think the government's job in infrastructure is more to create an enabling framework, transparent regulatory framework. And I think they are working with some very interesting funding solutions. So if you look at what has happened on the road sector, I think it is very powerful. So without really impacting the government too much, so they have created a two-tiered structure for funding of roads, and government is saying, I will bring in the higher risk capital. So I think there is a lot of statements coming that we will work around very innovative financing solutions. So I don't think the government really needs to take a lot of burden on its own budget to spend on infrastructure.
Okay, that's interesting that you say that. I want to come back to some ways on how they can make that public sector push. But before that, I'll persist with the question, Bala and, Chandresh, both to you, on whether has this market set itself up for a big disappointment if all you see in this budget is a keen eye on fiscal responsibility and nothing else?
Bala, you want to go?
Yeah, the way we see is the fiscal year, whether it's 3.6 or 4, it doesn't matter. I think the number to look at in the overall math, whatever the saving that has been accrued to the government of India in the last few years, which is large in the nature of the subsidies, coming from the oil subsidies as well as the related fertilizer subsidies and all put together, the estimated number is likely to be somewhere around 1,47,000 crores. And the number, where does it get added up to? The number is actually going to be spent once again on other related areas, such as again giving more money in the hands of people, or allocating more money in the hands of infrastructure companies in terms of building the necessary infrastructure. The way we see is, I think the allocation towards the capital expenditures to be undertaken by the government of India would be largely the true indicator of the commitment of the government in terms of getting back the growth path for the next year. So that's one. Second is, even in terms of tax collections, we actually had done some analysis. There is one component, which is of course the service tax component, also has been on the rise. So there is a high likelihood of the tax collections, especially in the service tax, also showing some kind of uptake. So in nutshell, if you look at it, I think the large expectation in the market is 3.6 or 4. I think whether it is 3 or 4 also, I think market will not mind, as long as the money is going to be spent on the productive assets in terms of getting back on the growth path. Also, if you look at it in the recent past, I think they are like something similar to what used to happen in the case of inflation. We used to go back and reset the inflation. But if you look at today, the budget in all probability may actually put the GDP number about anywhere about 7.5 to 8%, because the base number is also rising. I think there has been a discussion, there has been a complete reworking that is also being done in terms of looking at every component of the contribution to the overall GDP as well as the IIP numbers. So there is a reworking that is being done. In that context, if you look at it on an elevated GDP size, then the fiscal is about 4%, I think will be probably welcomed by the market. So you're saying he has
enough cushion to spend.
Exactly.
And so therefore it's not going to be a very difficult choice for him to have to make.
Exactly.
Okay, but I'll still persist in the question. Will markets be very disappointed if he doesn't do that? If you don't get a game-changing budget, are you in for a big bout of selling in the markets?
I think there will be a big disappointment. I think there is significant fiscal space, and while I'll belabor the point a little more, actually if you look at the total tax revenue which is going to be there and the other non-tax receipts, actually we are seeing a growth from 15 lakh crores to 18 lakh crores in the next year. This is, I'm taking both the state's share as well as the center's share. And this is all after, there is no devolution in this case because this number is anyway going to go up. Now look at the capital expenditure which we have done, let's say in FY 14 and 15. I think the total investment is in the region of 200,000, 250,000 crores. Now, if we can raise that number by 50 to 60,000 crores, it's a big impact to the economy. And why not do it? It's a counter-cyclical move by the government. The private sector is not in a position to invest. They don't have the money in one place and to the sentiment to invest. And this is, I think, at this point in time, the government should really step up and give that 25-30% increase to capital expenditure, their commitment to whether it's infrastructure, largely infrastructure essentially. So I agree, absolutely. I mean, if they don't really stand up and really push it in at this point of time, it will be a disappointment.
Okay, so we seem to have near consensus on the panel at least, that this is the time to do it. He has the comfort to do it. The math will work in his favor. There is the cushion to do it. Now the question is, how does he do it, right? This is the most important bit, Sunil. Governments are not known for efficient spending. Our government definitely has not been known for the last several years for efficient spending. So there is this whole ideological debate on whether you really want the government to do this. But assume that public sector spending is the only way to get private sector spending to return. How would you like to see him do it? We've had several experiments before, the IIFCL or IIFL, and none of them have really been big successes. Now there's talk of an infrastructure fund. Manish spoke about how they need to sort of come up with newer ways of being able to monetize infrastructure. What would you like to see the government do?
See, very clearly, you're right that in the past a lot of attempts have been made, but I think there was one big difference. For the first time, we have a very decisive government. So you don't have this coalition, you can say compulsions, which the previous governments had. So at least now, if they decide to do something, they can't say that someone else was stopping them. That is point number one. The second thing is, I think all the factors suddenly have become very positive for India. Whether it's the external factors, whether it's the currency movement, the interest in India. Manish mentioned there is no option, which is a fact. There's so much money coming into India, looking at coming into India, that RBI has had to, in fact, tighten so that too much money does not come into India. So we have this luxury of flows also looking at coming into India. So I think now, I'm not an expert in economics that they should do this or they should do that. What basically our view is that there is a resolve and there are now avenues available in terms of capital availability.
But is that enough, just the resolve and just the number?
No,
I'm putting 1 lakh crore rupees additional into capital expenditure.
See,
is that going to be enough?
It's all about sentiments and you can say comfort as well as confidence. There is enough money within India, there is enough money outside of India to be put to productive use. You take the example of in equity markets. There's always this talk that there's too much supply coming in, but the more the supply, the more is the inflows also which come in. I think the same is the case here. People have burned their fingers in the past and therefore this hesitancy of investments. I think right now, you can say the thought process is that yes, the government is determined to do it. As you mentioned, there is a 0.5% saving in terms of the subsidy. There is another 0.5% saving in terms of additional taxation. The direct benefit transfer hopefully should again lead to at least a 0.25% saving as we speak, at least as per our thing. So that's a
big. So we've established he has the money, maybe, right. Maybe if our math matches his math. Yeah. We've established that. But it's really important to know what the form of that spending will be. It's not enough to have him put a number to it. And therefore, what are you looking forward to the budget? What are you not looking forward to?
So clearly the various ministers have, have their goals set. So whether it's the power minister in terms of, at least kickstarting the fact that the coal auctions are done. Now you have to incentivize it.
That's thanks to the Supreme Court. Let's not confuse the two. Everybody gives this government the credit for coal auctions.
I don't think so.
If the Supreme Court had not deallocated those coal blocks, the auctions would have never happened. So whichever government of the day would have had to do what the Supreme Court.
But this government allocated them back, right?
Through an auction process.
Yeah. So it was done in a very timely manner. What I'm trying to say is that the intent is there.
Because of the Supreme Court deadline. It's April, the deadline. Look, the government has done what the court has required them to do.
The Supreme Court deadline was that after 31st March you can't mine it. The Supreme Court deadline was not that you have to auction it.
No, it was said that you must reallocate. So then, all I'm making the point is, it's not enough to have a number out there. We need to see that number backed with substance in how he's going to be able to spend it.
Aditya Birla Group presents Budget 2015, the Make in India Budget, co-presented by SBI. What market wants.